What's up, everyone? It's Scotty with MoneyVest. So we are coming up to the mother of all trends on the S&P 500. In other words, the MOAT. And this is exactly the level that, we pinpointed with that higher low. And there was a report recently that came out suggesting that very same chart that we have been talking about in our market update. So I'm going to break that down. And I'm also going to talk about, over the next few days, what is possible in the markets and what are certain levels to really watch. Very, very important because, if those levels get broken, there's possibility for more upside versus more downside. So I'm going to break down some of these very, very key areas of resistance and support that we need to pay attention to, because that's really what's going to dictate market direction. Because at the end of the day, it all comes down to the bulls and the bears and what are they going to do with market direction? Where are we going to go, right? What's the expected move and the direction? And so that we can plan our trades appropriately and, of course, analyze risk and reward. Again, these are not predictions. I don't want you guys to come to the channel, oh, Caddy's going to tell us where the market's going. No, I don't know. Nobody knows. But what we can do is we can try to identify very important support resistance levels, and in case we get broken to the upside or to the downside, the probability increases for that directional move, and so it helps us kind of make those trading decisions and investing decisions so that we can plan our risk and reward. So that's what this is all about, right? Trading is very much reactionary, not being proactive, right? It's not about predicting, but instead reacting to breakouts, breakdowns, certain different technicals, all those different things. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. There is a 16% annual discount that does expire in 2 days, so 29th and 30th. After midnight on 30th, it will go away. So link's going to be down below if you're interested in joining us. So this right here was the report. The S&P 500 is brushing up against the mother of all trend lines, and what happens next could make or break the market. And I could not agree more with this analysis, because this is exactly what we have also talked about on the channel. And this is coming in since October lows, I believe, actually even going back as far as the pandemic. I think that's where it kind of draws back to. And you can see that we are once again coming up to a very, very important trend line for the S&P 500. Of course, bears did what they had to do. So we are down a little bit over 8% from our recent highs. Now, what will bulls do here is the question, and this is the MOAT, or in other words, the mother of all trend lines. This is the NASDAQ, which is already starting to break below that support, and that was the case with the NASDAQ as well. We'll go over that in just a minute. And this right here is the 30-year yield chart. Now, one of the things that I've talked about in my previous videos is the reason why the market's starting to get under a lot of pressure is because of the 10-year yield, the treasury yields that are pushing higher and higher, and they're getting up to levels we haven't seen in 15 years, 16 years, 17 years, right? So 30-year trading at over 4%, the 10-year trading at over 4.5%. It continues to push higher. That combined with the dollar index, so DXY pushing higher, and crude oil prices also on the move up, right? So SPR, the petroleum reserves depleting. There's little to no reserves left. And of course, Russia and Saudi Arabia are cutting oil production, which is causing oil prices to go even higher, which is going to create some pressure on inflation. All these are headwinds for the market, all of them, right? All the ones that I just mentioned, higher yields, higher dollar index, and higher oil prices, all of them are combined putting pressure on the market. And that's why the bears obviously pushed us down over 8 to 9%. But now we're getting down to pretty oversold territory, right? We're getting down to levels that we haven't quite seen in some time. In other words, there's only a handful of buying opportunities, right? So January was one, March was another. Actually, December 2022 was one. October obviously was the low for the bear market, and then March, and then now, right? March and then September. So it's been quite some time that we've seen levels, markets for it to come down. Majority of stocks now trading below their moving averages, 20-day, 50-day, 100-day moving averages. Volatility's, been muted most of the year, but it's spiked once again. So this creates an environment where a technical oversold bounce, I'm going to repeat, this creates an environment where a technical oversold bounce is possible. And that's why, of course, the markets were higher yesterday, even though we didn't quite see a lot of the follow through. I mean, we got a little bit of that rejection, but it is possible that we do see over the next couple of days some momentum back up for the markets, as we are, again, very oversold here. That's exactly what I want to go over in this video. And also talk about that there is possibility there is possibility that the yields continue to push higher. As we have already talked about the bond market and the significant demand-supply imbalance, and there is so much supply hitting the markets on a corporate and government side that the market can't absorb, all that supply. I mean, it doesn't have the appetite. In fact, Bill Ackman, was in touch with one of the CIOs at a fixed income group, one of the biggest ones out there, and they pretty much, said that there's too many bonds out there, and the only thing that they can do is step away. And if that happens, well, guess what? There's going to be more upside for treasuries. There's going to be more upside for yields, and that will result in bond prices to basically sell off further, and that's obviously going to put more impact on equities. So in this report, they also mentioned that on the 30-year, if 4.8 breaks, there is no resistance until 5.4%. And that's exactly what I've also mentioned in our community, in our Discord, for the 10-year yield. So if you come over to this chart, I basically mentioned that if we actually continue to see this follow through, right, the next resistance, unfortunately, on the 10-year yield is all the way up to 5.1%. That's pretty much the next resistance, because we got a huge breakout from this right here, 4.2.5%. And the next resistance, as unfortunate as it is going to be that 5.1%. Same thing with the 30-year. If 4.8 breaks, there is no resistance until 5.4. So US 30Y, this is where we are. Basically, very, very strong move to the upside, and that next resistance they're suggesting to be at around 5.4, which could obviously put pressure on equities and could drop the NASDAQ down to 13,300. Now, this right here is exactly what I mentioned yesterday, right? During the market open, bouncing from the lower low here on the SPX, short-term rally to 44.75 possible. Technicals were oversold, so it's nice to see a bounce. And this right here is what they also mentioned, that in that report, they expect some sort of a bounce in the 42.50 range, which may have already started yesterday to lead into 43.35, and a rejection at that level would form a lower high and open for new lows, while breaking above that level opens us up for 4,400, and that's exactly the level that I also pointed out, 44.75, closer to 4,400. Is going to be that level. So this right here, S&P 500 stocks right above 20-day moving average. So right now 46% gain yesterday, and now we're getting up to almost 19%. So we're seeing that technical oversold level, starting to see that bounce back higher. This is S&P 500 stocks trading above their 50-day moving average, a 24% gain yesterday, 19% stocks now, so almost 80% of them are still trading below their moving averages. But guess what? We are once again at these pretty oversold conditions. So if I were to draw this right here, again, oversold, we're starting to see that very nice move to the upside for this index as well, as it's now starting to make some moves back to the upside. Now, going over to the S&P, this is going to be that chart. This is what we have talked about in our previous videos. So if you kind of scroll back, you'll notice that this has been a mother of all trends, as they like to call it. And this is since October. And if you scroll back even further, this is literally coming in since COVID, right? So this is literally the March 2020 low. And we've just been validating this higher low for S&P 500 for such a long time. So if I basically delete everything here, this right here is the trend line that they are referring to right there. And that's where we are pinning down to that support at around 4,200. Low for yesterday was around 4,264. This week, the low we have seen is around 4,238. So just about 4,200 is going to be that interesting level for us to watch. Of course, if we do see a breakdown below this, then as unfortunate as it is, the next possible support is going to be down to 3,800. Well, I guess I got to take that back. That's probably a very, very brutal sell-off, but there is going to be more potential support levels here. I guess previous resistance acting as a potential support at around 4,100, and then of course all the way down to that potential level on the S&P, which is going to be sitting at 3,800, which, look, nonetheless is going to create some incredible buying opportunities, but we got to take it week by week. We got to take it slow and steady. So first things first, we got to see if the S&P validates this level, or if the bears have what it takes to push us down even further, and of course bring us down to sub 4,000 once again, which I doubt it's going to happen unless, of course, inflation comes in super hot on the back of energy prices. If we start to see Federal Reserve become a little bit more hawkish, they already are, and the market's going to start to get around the fact that there is one more potential rate hike possible and fewer cuts in 2024. But nonetheless, this is going to be that trend line, folks. Very important to watch at around 4,200. A breakdown, next support is going to be 41.72, and of course a breakdown below that is going to put us on target to possibly getting down to 3,800, right? So that's going to be that next support level to watch in line with this double bottom support here from the S&P back in March and back in December. So I hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. Resistance is going to be near term at around 43.22. Yesterday we got rejected at that level. If you do break out above this, that opens the door for 4,400 and a potential rally up to 3.5%, 4% back up to 4,450, 4,400 as I pointed out previously. But of course, it's really going to come down to this support. It's really going to come down to this higher low and this point at 4,200. If you break down, well, be ready. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. If you're interested in joining, we'd love to have you on board. 16% annual discount that's available till the end of this month, so a couple more days left. I did open up a few more spots. As always, happy investing. I'll see you all in the next video.